So picture your favorite neighborhood taco stand, or maybe a local corner store. You hand over a few bills, and they just toss it into a metal lockbox or a worn-out cash register.
Right, yeah. It's very tangible and immediate. But relying entirely on physical money like that, it actually creates a massive ceiling on growth. I mean, if you only deal in cash, you're essentially operating your business on a financial dirt road.
A financial dirt road.
Yeah.
That metaphor perfectly captures what we're looking at today. Welcome to our deep dive, where our mission is to unpack a massive regulatory shakeup designed to digitize over 4.4 million small Mexican businesses.
Yeah, and we're basing this on two really fascinating sources. A June 2026 press release from Banxico, that's the Bank of Mexico, alongside a recent financial analysis report.
Right. And the core of this whole thing is Banxico introducing a completely new banking tier. It's called the Cuenta Nivel 2Biz, and it fundamentally changes how microbusinesses interact with the financial system.
It really does, because to
Mhm.
understand why this new account is so revolutionary, we first have to look at the bureaucratic trap these merchants were previously stuck in.
The Goldilocks problem, right?
Right.
Like, historically, small merchants had to choose between a piggy bank and a corporate vault,
Exactly. Under the old rules, a vendor could easily open a basic level 2 account, but it capped monthly deposits at about 26,000 pesos.
which translates to roughly 3,000 UDs. And for those of you not glued to Mexican financial metrics, UDs is just an inflation-adjusted index the government uses to set limits.
Right, right.
But the real issue is that an active corner store is going to hit that 26,000 peso limit in, what, a few days of good sales? It's completely restrictive.
Oh, totally restrictive. So to get a higher limit, you had to upgrade to a level 3 or 4 account, which meant taking time away from your shop, going into a physical bank branch, and most daunting of all, presenting formal tax registration documents.
And there's a huge psychological barrier there. For a semi-informal vendor, the moment you hand over formal tax documents, you worry the government is going to scrutinize every single peso you make.
Yeah, the anxiety is very real.
So rather than deal with that anxiety in the paperwork, they just stay unbanked entirely. But this Nivel 2Biz tier solves this by acting as the perfect middle ground.
It really is. It bumps the monthly deposit limit up to roughly 132,000 pesos.
Wow, so that's about 15,000 UDS.
Exactly. But it keeps a 100% remote digital opening process using just a basic ID. So you completely skip the immediate need for formal tax registration.
Okay, let's unpack this a bit, though. Banks don't just hand out higher limits for free. I mean, what is the catch? How are they mitigating risk?
Right, they still have to worry about money laundering. So Banxico introduced this very clever regulatory hook. It's the 80% rule.
The 80% rule. Meaning what exactly?
Well, to keep that 15,000 UDI limit, a minimum of 12,000 UDs absolutely must come from digital payments.
Oh, okay. Meaning a vendor can't just walk into a branch and dump 100,000 pesos in physical cash into an ATM.
Exactly. Only 3,000 UDIs of your monthly deposits can be cash. The rest has to flow through digital channels, which forces the vendor to use tools like SESBII.
SBEI being Mexico's national electronic transfer system.
Right. Or they use CODI, where, a customer just scans a QR code with their smartphone to pay, or even just simple payment links.
But wait, what if they do try to deposit more cash than that 3,000 UDI allowance?
The transaction simply gets rejected, or they actually risk losing that higher account status entirely. By tightly capping the physical cash, the central bank builds an automatic, verifiable paper trail.
That is a brilliant way to incentivize the informal economy to formalize. You give merchants the higher capacity they desperately need to run their shop, but the condition of that capacity is a digital footprint.
And that digital footprint directly translates to safety and growth for the merchant. I mean, think about the day-to-day reality of running a cash-only business.
Yeah, you are basically a walking target for robbery.
Robbery, absolutely. Plus, you are constantly stressing about accidentally accepting counterfeit bills.
Not to mention the sheer logistical cost of transporting physical cash securely.
Exactly. But beyond the immediate physical safety, there's this hard implementation deadline approaching on December 14th, 2026.
Right.
By pushing these businesses to adopt electronic transfers and QR codes now, they start generating months of verifiable sales history.
And a verifiable sales history changes the entire trajectory of a small business. Because when that merchant wants to buy like a second storefront or upgrade their refrigeration equipment, they don't have to rely on predatory lenders anymore.
No, they have a digital ledger that proves their revenue to a formal bank. It unlocks actual commercial credit.
It turns that financial dirt road we talked about into a paved, multi-lane highway. The regulation doesn't punish the vendor for being informal. It simply removes the friction of bureaucracy.
Yeah, it builds them a highly attractive on-ramp to the formal economy. It aligns the macro-level goal of digitizing a national economy with the microscopic reality of a street vendor who, just wants to sell more goods without hitting an arbitrary deposit wall.
Which brings up a really fascinating thought for you to ponder as we wrap up today's deep dive. If simply mandating an 80% digital threshold successfully transitions millions of informal vendors away from physical money here,
Yeah.
could this clever regulatory model be the ultimate blueprint? Like, are we looking at the exact mechanism that finally makes physical cash obsolete in emerging markets worldwide? Something to think about.